Right, let's turn to how the markets are faring, and like Varun just flagged off as part of the headlines, the rally definitely has gathered momentum since we opened at 11,930 odd levels. Right now we're perched at 11,973, definitely a 30-40 points uptake seen on the Nifty 50 index. You have the SENSEX gaining in the excess of about 130 points, but the broader markets continue to be lackluster, especially the mid-cap index, which seems to continue being in the red, albeit with very marginal losses at this juncture. Small cap index hovering around the flat line, up about 0.1%. What are the sectors that are aiding the up move in today's session? You have the Pharma index looking very upbeat. It's up a percent in trade. Some names from the FMCG and I T pack also gathering pace. In fact, the IT index is looking quite upbeat. We also have Wipro's earnings coming out later today. There's also Nifty Realty doing well, about 0.5% higher. But on the flip side, what is capping the upside is couple of banking names. You also have Nifty Media, which is bleeding right now. PSU banks, some of them are also witnessing pressure, and even some of the NBFCs are also down in trade. You have the likes of Ultratech Cement, Shree Cement, HCL Technologies, UPL, Bharti Airtel, Dr. Reddy's, Grasim. These are the names from the benchmark index that are aiding the uptick. But on the other hand, you have the likes of an ICICI Bank down 1.5%. GAIL is also down about 1.5%. Tata Motors, Bajaj Finance, both losing in the excess of 1% each. So that's largely how the market is looking like right now. We're still a bit shy of the 12,000 mark, but yeah, nothing to complain about, at least as far as the benchmarks are concerned, Varun.
Okay, let's quickly go over the BNSN stock cloud this morning, and we have a lot of stocks that are currently what you might call very active in trade. You have an Ultratech Cement and Shree Cement, so two stocks from the cement pack this morning that are really standing out. You have a Wipro on the back of an expected result, a strong one at that, and perhaps a strong buyback. Then we have Bharti Airtel, Vodafone. For the telecom subscribers, Bharti gaining and Vodafone losing. We have a Shalby Hospitals in there today on some corporate M&A or corporate related announcements. We have Deepak Fertilizer for all that's happening with rural and fertilizer companies are really seeing a fair bit of uptick. We then have Vivimed Labs, Mahindra Logistics and Cipla for that approval we spoke about earlier. And then again, some corporate related actions. You can look out for Vivimed and Mahindra Logistics on the exchanges. But with that being said, we're now done with the cloud, and I believe our guests are ready to talk to us, both Kunal, Bhatra and Vikas Seti. Good morning, gentlemen, and thank you for taking the time to chat with us. Kunal, coming to you first. We seem to have a slightly bullish mindset today for the markets, but I think what's dampening it a little bit is the fact that the futures this morning turned negative, because when I went to bed last night, everything was positive. Even the futures were looking up. So what's your sense? Is this range going to continue? And then what's your high risk and low risk idea for today?
So good morning, Varun. Yes, I think what the US market what transpired yesterday in the US markets, the expectation was that probably our markets would also open with obliged with a kind of a gap up, but it's been a different reaction for the markets. I think it's largely got to do with a couple of things. One is that we tested that 12,000 mark yesterday, 24,000 on Bank Nifty. So it's bound to be that after the a steep rally of 1,200 points on the Nifty in the last 10, 11 trading sessions, it's bound that the indices go through a consolidation. But if the global markets continue to do what they've been doing, on a positive side, then I believe that this consolidation may not last for long, and our markets will also probably try and join back the party yet again. So I think it's a matter of a couple of days, for someone who's trying to time the market. I think if the index consolidates over there, it would be a good stock-specific opportunity, because then you would have some of these large cap names which have done extremely well. They could probably try and go through a bit of a clawback. But then when the second wave of the rally starts, for the indices, then I believe that it could be much of a sharper rally yet again for many of these stocks. So I think the bias in this regards remains to be on the positive side. But it's just that the routine sectors and the stock specific churn would probably keep on happening. Now, in this regards, I would continue to suggest a couple of buy calls, and I believe that from a short term trading perspective, there are many stocks which are emerging as fresh breakout candidates. So I would suggest two buy calls. The first one is a buy on Pidilite Industries. I think it's a very interesting chart in the making. We've not discussed stocks like Pidilite Industries in the last, I think, few months. But the stock is now nearing a rounding pattern or a consolidation pattern breakout around this 1500, 1505 mark on the spot level. So I think it's a stock which is inching towards a very strong breakout on the daily time frame. It's been trading above the 200 moving averages. It's been trading above its short-term supports as well. So price-wise, it seems to be on a positive side. But in the breakout, I believe could probably happen anytime soon, given the fact that the markets are now getting back towards the breakout of this psychological mark. So it would need a lot of these mid-cap names to try and fire up yet again. Would suggest a buy on Pidilite, targets of 1540, stop loss at 1470. And the second would be a relatively low risk idea. It's about HDFC. Now, as I was indicating earlier, that many of these stocks which have done exceptionally well in the last 10 days, they could take a bit of a pause. But then the second wave of the rally could come back into these names yet again. So I picked up HDFC, which has done fabulously well. I think this last 10 days of rally, it's been one of the few stocks which has rallied more than 10 to 15% from its swing high. So almost a 200 or 250 point rally on HDFC from its recent swing highs. Tried to break the 2000 mark, consolidated, has retraced a bit, but I believe at current levels of 1970 approximately, I think it's a very attractive buy. So would suggest a buy on HDFC, a relatively low risk trade, targets of 2040 and stop loss 1940.
Okay, thank you, Kunal, for sharing your picks with us. Hi, Mr. Seti. Could you also give us your high risk and low risk idea for today?
Good morning, Varun. Good morning, Karunya. As far as my picks are concerned, they are both long-term ideas, actually. We look at the markets from a fundamental point of view. So I would like to recommend two stocks, which I would strongly recommend investors to be buying into. The first stock comes from the same group where Kunal also was interested in. He talked about HDFC. And I like Hdfc Life Insurance from that group. It's a great company. It's into the life insurance business, which in my opinion has tremendous growth opportunity. The sector is highly underpenetrated. The management is solid. It's a very strong pedigree, and the fundamentals look pretty solid. So I think at the current levels of around 570, this stock should be bought into from a perspective of 9 to 12 months, and I have a target of around 675 rupees on the stock. The second stock which I would like to recommend is from the cement sector. I feel this sector is headed for good times ahead, with the monsoon already getting over, and the monsoon had been good, and with the kind of focus which the government has on infrastructure and housing, I think cement would be a sector to watch out for. And from that sector, I've chosen a mid-cap cement company by the name of JK Lakshmi Cement. The fundamentals are pretty solid. The company enjoys better margins than its peers within the industry. They've focused on cost optimization, have pretty strong cash flows, and they've been trying to reduce their debt also. And if you look at the valuation, it trades at around 12 to 13 times its trailing 12-month EPS. The operating profit margins are around 14.3%, good return ratios, debt equity ratios also reasonable at around 0.87. And the FIs and DIs are also pretty interested in the stock. They own around 38% in the company. So all in all, everything which is required for a good stock to run. So I would recommend this stock at the current levels of around 270, and my targets in a year's time would be 350 on the stock.
Okay, thanks for your fundamental calls as well, Vikas. Let's address some of our viewer queries. First up is a Twitter query from Yashoda. She wants us to address two of her queries actually. Let me start with the first one. She's bought 300 shares of Concor at 412 rupees a piece. The other one, 300 shares again, but this time in Bharti Airtel at 548 rupees. Let's talk about Concor first. She wants to ask whether she should average them, book her losses and exit perhaps, if not average it at the current juncture. Kunal, Concor definitely in the last 2 months has been very, very range bound. 360, 350 odd levels is where it keeps hovering around. So how do you see it play out in the future? Should she average, or do you think she should perhaps exit right now?
So, currently I believe that the viewer can probably stay invested in Concord, because I don't see any major change of trend which is happening, for the stock. After that, sharp downtick, I think it was in the month of August, where the stock was, had fallen from 470 on a single day to almost 370 or 380 levels. Post that, I think it's just gone through a downward drift. So my sense is that the stock is going through a time-wise correction. This is the most difficult part to anticipate, that when would the time-wise correction get over. Had it been a price-wise correction, then traders could have anticipated of what level the price correction generally ends, because that's where the stock lands up into some sort of a consolidation or support zone. But this time-wise correction is the most difficult, to anticipate, and I would sense that the stock may probably take some bit of more time. The volumes have dropped off for Concord in the last 1.5 months. After that fall, and which is why I believe that the trader participation drops down. Now, what would happen is, if there is some kind of an event flow or a news flow which comes across into the stock, and then you see a flurry of buying activity, I would suggest that you can hold on to your investments over here. The stock charts have not been damaged. 350, 340 has been a historical, multi-year support as well for Concord. So I think in all those aspects, I think the stock is just about hovering near the support level. But just because it's at the support level, I would not suggest a buy or an average. I think wait for the stock to show decisive signs of turnaround yet again. So either the volume picks up or the prices go decisively above the 385, 390 mark. I think either of that happens, and then you should look to average further, because then the chance of you making profits on your investments would be far more higher. So that would take probably another month or two. Difficult to anticipate, but I think these are the two signals which you should wait out for. Either the volume increases in a burst, or else the prices break about the 385 to 90 mark.
Okay, all right. Let's talk about the other stock then. Kunal, how are you reading into the technicals of Airtel? She bought it at 548. What would be your advice?
So again, I think Bharti Airtel is also a chart. I know that many of the investors have been holding on to the same, but it's also a chart on the long-term basis which has come back to a rising support trend line. Now the rally started for Bharti Airtel in 2018 odd, when the stock was, I think, at 250 or 275 rupees, and from there on it had almost a stellar rally till 600 plus levels. Now, if you join the supports which arises from those 250 to 75 supports, or the starting point of this rally for Bharti Airtel, the stock is now coming back to a strong support trend line. So it's a rising support trend line for Bharti Airtel from exactly those lower end of the points, and which is why I believe that if the stock holds on to this zone of 420, then I believe that there could be a possible case that over the next few months, so maybe over the next couple of quarters, be slightly extensive in terms of time frame, the stock can go through a turnaround phase yet again. And if that happens, I think the stock can come back to a median zone which is of 500, 525 plus. So I would suggest that hold on to Bharti Airtel as of now, because if the stock is very close to support, whether the support breaks, then there is a possibility that you might see a complete reversal into the stock price. But if the support holds, which I think the evidence for that we could probably get to know probably in a month or two, then I believe that there could be a strong case that the stock may continue its long-term uptrend. So as of now, I would suggest the hold, and probably review and revise the decision yet again over the next 1.5 odd month.
Okay, Vikas, what is your view then on Concord as well as Bharti Airtel? If you could give us your recommendation on both of these names.
Yeah, Karuna, as far as Concord is concerned, the stock has clearly disappointed. It has come down to these levels, but I think at the current levels of around 360 odd, the stock looks good from a valuation perspective. And then the trigger which could be there, which would lead to a strong rally in the stock, could be if anything positive comes out from the government on the strategic stake sale part. If that happens, the stock can easily pass the investors' acquisition price of 412. And so I would recommend that the investor continues to hold on to the stock. And at this level, even fundamentals look good or there from a valuation perspective. So my recommendation would be to continue to hold on to the stock. And I think if he gives another say 6 to 9 months to the stock, I think he can make some money also out of the stock from his acquisition price. And as far as Bharti Airtel is concerned, again, a big underperformer. The stock has corrected sharply or crashed sharply from its highs of 600 plus to current levels of 425. But I like the business of Bharti, and the recent numbers also have been pretty positive. And I think it is on a strong footing when you compare it with its peer like a Vodafone Idea. And at the current levels, from a valuation perspective, the stock looks good and there is very little to lose from the current levels. So I would recommend a hold again in Bharti Airtel. And I think we can easily expect it touch coming back to levels of 525, 550 in the next, say, 6 odd months.
Okay, great, Vikas. Thanks for that. Before we get on to our next query, let me just address the BNSN quiz question for this morning. We've had a lot of people responding. So let's just read out the question for you. It was, which of the following recent IPOs have had the highest listing gain? So that does not mean how it closed at 330. That basically means at 950 when it settles, where it really settles at. So your options were Route Mobile, Happiest Minds, Chemcon Specialty Chem, and Mazgon Dock Shipbuilders. We have a host of responses. We'll be announcing the winners at 11:45, so stay tuned for that. And you still have around 25 minutes to keep tweeting to us if you are interested in answering the question. Let's now get a move on and take a look at our next query. Girish Khanna from Mumbai has written to us. He's bought SPI at 300 rupees per share. He's been holding it for a year. So he's lost money. His query says it's traded up to 220 rupees a few times, and then it always slides back from there. So the next time it does this, should he book, add, or stay put? So Kunal, coming to you first, what's your advice for Girish?
Well, I think you should stay put, on your investments on SPI. I believe that many of these banking stocks, they are going through, in fact, the bank Nifty overall is going through a strong turnaround mode. Now, in fact, I was looking at the Nifty and the Bank Nifty ratio historically, and the ratios for the Bank Nifty versus Nifty has come back to a historical support levels. Now, whenever that has happened, we've seen that the Bank Nifty tends to outperform typically, given a period of 6 months to 1 year. Now, I think if that's your medium-term kind of a time horizon, then I believe that if the Bank Nifty tends to outperform, you see a Bank Nifty rally. Hopefully, then I believe many of these large-cap banking names would be the leaders, of this rally. So I think in that regards, the earlier resistances or the resistances for SPI, which is around 210 to 20 zone, I think those resistances eventually will get taken out because a Bank Nifty would need a support of these large cap names to try and participate and on the way up. So I believe that SBI, I think you should hold. I think it's a matter of time, maybe another 3 months or maybe another 6 months. You could eventually see a strong breakout on the stock trying to participate and play that catch up play over the medium to long term. So if your time horizon is, even if your time horizon is restricted towards 6 months to 1 year, then I believe you should stay invested over a year.
Okay, so Kunal's advice is a firm stay put. There's a lot of value and it eventually will play out. Vikas, do you feel the same way? Because SPI has also been the biggest value trap for investors for a long time. So, there's some people think it might just remain that into the foreseeable future. What's your take?
Again, Varun, I concur with the views expressed by Kunal in the sense that there is a lot of value in the stock at the current levels, but unfortunately, the stock has not been able to perform. And the same goes true with stocks like an ITC or a Bharti Airtel. But I think their time also would come. So the investor, since he's already waited for a year, I think he should give 1 more year to State Bank of India. And I'm sure from these levels, certainly he would see substantial upside. And I think he would be able to achieve his cost price also in a year's time. So my recommendation would be to hold on to SBI at the current levels.
All right, thanks for that. Kunal, back to you then. What are the chart buster for today that you have identified? Which are the stocks that are setting the charts on fire?
Well, apparently it's on gold, which I wanted to showcase now. Currently, I remember, I think a month and a half back, I think 2 months back, rather, end of July and just the first week of August, I had mentioned that how gold is now nearing a top out formation, and there could be a possibility that gold may go through a consolidation over here. So price correction as well as a time correction both could happen. Now I believe yet again that gold is now inching towards a breakout yet again. So this is a classical 2 years chart for prices of gold from those 2018 levels when gold bottomed out at 1050 1100ish kind of zone. Now from there on, you see the price patterns. The price is moving in an exact kind of a channel pattern. You see the zones A, B, and C. These are zones of consolidation. So after a steep rally, when the prices tend to come back to a resistance zone, they tend to hit back to a resistance zone, consolidate, go through a time correction, price correction, and then once the consolidation is over, you see a continuation rally for this asset class. So we've seen the periods A, B almost identical. Where you see the prices of gold consolidating. When the breakout happens in a matter of 3 or 4 months, you see the gold prices rallying almost $250 from the breakout point. So in all three of the cases, A, B, and C, even though the consolidations are a bit different or the type of consolidation are a bit different, but the breakouts in a span of 3 to 4 months have been to the tune of almost $250 on the international prices. Now we come to the point D, which is at the current juncture. Gold prices yet again have come back to a support trend line, as you can see, or the lower point of the rising trend line, as well as you can see that the time-wise correction has spanned to 3.5 odd months. So a breakout is in the offing for the gold prices, and I think if the gold on the dollar prices crosses about that 1930 zone, you could probably see one more round of a rally for this asset class. And if you try and just extrapolate the historical paths of a 250 point or 250 dollar rally in the gold prices internationally, then it should land the gold prices back above its all-time high level. So I would believe that gold as an asset class could be in for one more round of rally again, and the breakout point is around $1950 on the international prices.
Okay, Kunal and Vikas, thank you so much then for joining us today and sharing with us your views on the markets, different stocks, and as always, helping our viewers out. Slipping into a break here, more updates when we come back. Stay tuned.
Back to Buy Now, Sell Now. Earlier in the day, Nikunj and Aisha had a very interesting interaction with Atul Suri, who is obviously the manager at Marathon Trends. He believes that the IT sector is going to continue to do well going forward. He also reiterated his stance on Reliance and his latest ideologies of investing. Let's listen in.
We feel that this move in IT in the US is not a flash in the pan. I feel there is a tectonic shift that is going to happen in consumer behavior, consumption patterns, socially and in office spaces. And, what we were anticipating in terms of digitization to happen in the next 5 years is likely to happen in next 2 years. So this front loading, I think, is going to be a very big opportunity, and that is being reflected. Of course, the NASDAQ is there, but as far as India goes, you can see it. As a sector, we have been probably IT is the best performing sector in the last 6 months from the lows. So I think that these are shifts. The shift is happened actually away from banking and finance. So from the bottom, this has been this lead sector prior to the COVID fall. But from the bottom, if the Nifty has moved 60%, the bank Nifty has moved up only 47% versus IT and Pharma about 100%. So what you are seeing is a massive shift, a change that is happening in the themes or in the trends in the market. And as an investor, as a portfolio investor, I guess that is what we really have to do, is be able to navigate the ship between the various tides that are happening. And I think this is a very, very sort of substantial move. It's already happening. People say it's discovered. I don't think it's discovered. I think these are themes that will play out. The overweight 4 themes that we are in: IT, Pharma, specialty chemicals, and of course the whole consumer theme. So I think that these are going to be overweight themes. Surprisingly, shockingly, though controversially, I feel that banks and financials will underperform.
Okay, let's shift gears and talk about some specific stocks and the reason why they're in focus. Let's start out with the Wipro. The numbers will be out this evening. Poonam is standing by to tell us what to expect.
Well, post stellar Q2 coming in from TCS. For Wipro also, we are likely to see a better quarter. Revenue is seen expanding after a contraction in the last quarter. Dollar revenue is seen at 1968 million, which is a growth of close to around 2.4% quarter on quarter. Revenue growth in constant currency terms is seen at nearly around 1.7% quarter on quarter. In fact, we should also be seeing an EBIT expansion on a sequential basis. On an average, analysts expect an EBIT margin for the IT services anywhere around 40 to 45 bips, and some of the analysts do expect an EBIT margin expansion of close to around 70 bips sequentially. And this is going to be on the back of better revenue growth, efficient execution and cost control measures. Besides that, of course, watch out for the commentary in terms of the deal momentum. Do note that we need to watch out for the announcement on the buyback front. Analysts will expect a buyback announcement of anywhere around 13,000 crore. The last two buybacks have been in the range of 10,500 to 11,000 odd crore. In fact, besides that, of course, the commentary by the new CEO in terms of the strategy, overall growth strategy, and also guidance coming in there. IDBI Capital expects company to resume quarterly guidance, and they see IT services guidance for Q3 at 0 to 2%. Besides that, of course, the entire commentary in terms of the demand across verticals, BFSI, consumer business especially, and the entire commentary in terms of the deal momentum.
Okay, thanks for that, Poonam. So much happening with IT this week, and Wipro obviously a big boy to look out for. But talking about big boys, we're switching sectors to the pharma sector. Cipla is in focus. My colleague Pankaj Podar is now with us. He tracks the entire sector really closely. Hi, Pankaj. Great to get your perspective in. How big is this CRL for Avenue Therapeutics, and how is it likely to help Cipla?
So, you know, when we talk about Cipla, Avenue Therapeutics is where they have investments. They had invested about $35 million in the company back in 2019, and they had given them this money so that the clinical trial for this drug is something which they could complete. So they completed that, they filed for a FDA, and 10th October is when the approval, or, you know, a status update was expected. But instead of an approval, you've got a CRL, which is a complete response letter from US FDA, which means that US FDA at this point of time is not satisfied with the ANDA filing. They have related some questions. They believe the drug is not safe, and that's why they have written back to the company saying that they need to answer all these questions in a satisfactory manner so that they can go ahead and give approval in the future. Generally, a CRL would take about 6 to 9 months to go ahead and resolve. It's a specialty drug that we are talking about. The important thing for Cipla is that Cipla had to invest another $180 million once they get this approval, and there were certain other 2, 3, 4 conditions. So maybe that holds back at this point of time. It's not a market-moving event as far as Cipla goes, but now markets are factoring in 6 to 9 months down the line, which is in April or May 2021, when you get a status update on this particular drug. That's when the next phase of investment for Cipla into this company may actually start. If the approval goes through, people are still expecting that Cipla will go ahead and invest, and it could be a sizable opportunity. It's a specialty business that we are talking about, and as of now, specialty revenues for Cipla are expected to be zero. In fact, except for Sun Pharma, from no other company the street is anticipating any major specialty revenue growth.
Okay, great. Thanks for that, Pankaj. Quite an important development for Cipla, and we'll be understanding it more and more, as he said, over the next 6 to 9 months. But let's switch gears again and come to the chemical space, where SRF has opened up their QIP. As of last night, we understand a 750 crore share sale is on the anvil. The price has been set at 4,168 rupees per share, which represents the typical 5% discount to yesterday's closing price of 4,368 rupees. Now, It's interesting because it's the second big chemical player to go for a QIP. So we've had PI with their 2,000 crore QIP a couple months ago, citing inorganic and organic growth opportunities. Same here for SRF. They have capex, increased working capital. They even have some debt that they could possibly pay down, and they may have lined up a nice acquisition as well. So will be interesting to see what the proceeds are actually used for. But just when you talk to some of the manufacturers of the glass line equipment, they did say that SRF is one of the players who is doing capex more aggressively. So surely the outlook remains quite strong on this one, and their packaging's business as well, which has done so well and contributed so much to their EBITDA in recent times. So keep an eye out for SRF. Despite that 5% discount, the stock's still holding out, slightly negative, but nowhere close to 4,168. Back to you, Karunya.
All right, let's keep it with some stocks and news then. Everready Industries, another stock on the radar. Mubina is standing by to tell us why that is.
The Khaitan family is one of the earliest business families from Kolkata, and their shareholding in Everready Industries and in several other group companies has been steadily declining due to the ever-increasing burden of a debt. Remember that the Khaitan family had pledged their shareholding to various creditors, and now the most recent news with respect to the same is that Vistra ITCL, which is by the way one of India's largest corporate trustees as well, has invoked the pledge put forward by the Khaitan family on almost 17 lakh shares. So with this invocation, the Khaitan family's holding in Everready Industries drops from 7.2% to 4.92%. That's below 5%. Remember that, you know, in June, as on June 2020, the Khaitan family owned, I think, around 22% stake, and as on June 2019, the stake was almost 42%. But it's this debt burden, it's the entire stumbling corporate resolution process that has caused their shareholding to plummet to just 4.9%. In August, that's just about 2 months ago, we had IndusInd Bank as well invoking the pledge, which caused their shareholding to drop below 10%. It's the Berman family now that do have the largest shareholding with around 20% odd. In the past as well, we have had Mr. Amritanshu Khaitan say that, look, it's the Bermans that are finding value in the company. This is a way perhaps of assuaging the shareholders as well. At times they have sort of denoted their willingness to have joint management with the Bermans, but for now, you know, the corporate resolution process is still underway for Everready, and in the meanwhile, unfortunately, the Khaitan family, while largely they seem to be maintaining control or management control, they have lost shareholding control.
Thanks, Mubina, for that. Meanwhile, telecom space is also very much hogging the limelight. You have Airtel as one of the biggest gainers on the benchmark today. But on the flip side, there's a Vodafone Idea also reacting to the telecom subscribers data. Vinny is here to get us an update on all the key telcos. Vinny.
The July subscriber data is surely showing some signs of positivity over here, as for the first time since March 20 that they have seen an increase in the gross subscribers. So very interesting data coming in over here. Overall, those gross subscribers are up by 3.5 million versus negative 3.2 million in June 2020. So positive signs, but Vodafone Idea has still continued to decline. They have lost around 3.8 million active subscribers in July 2020 versus 3.7 million subscribers in June. Now, overall, if you go to see the telecom data, Jio has managed to add 3.6 million subscribers. Airtel has added 3.3 million subscribers, whereas Vodafone Idea has lost around 3.7 million subscribers. Now, currently, the market share is Jio holds around 32.7% market share, Airtel holds around 29.1% market share, while Vodafone Idea holds 28.2% market share. So very interesting data. Now Vodafone Idea's management has stated that, you know, their user base was impacted by the inability to recharge during the lockdown months in the June quarter, but it has also registered a dip in July quarter. So that is something interesting that we're going to watch out for, and, you know, maybe we may see some focus on all these stocks today as well.
Okay, thanks for that, Vinny. But coming to an important hearing that's currently underway or will be giving us a conclusive outcome, the Supreme Court will hear a batch of petitions today seeking loan interest waiver and extension of the loan moratorium period. The court is likely to decide if any further relief can be given on loans over rupees 2 crore, apart from what has been prescribed already by the KV Kamath Committee. My colleague Abhimanyu Sharma, who's also been an avid participant or really a spectator at the courts, is now joining in with the latest on this case. Let's listen in.
The Supreme Court will continue hearing a batch of petitions today seeking an extension of the moratorium period and seeking loan interest waiver on all loans during the moratorium period. The court is likely to take a call on any possible relief for loans over rupees 2 crores over and above the Kamath Committee recommendations, which had proposed graded corporate loan restructuring for big borrowers. The court is going to decide whether the loan moratorium period is to be extended and whether the compound interest waiver proposed by the centre for loans up to rupees 2 crores would be given effect. Court is also likely to take a call on whether banks can declare loans as NPAs, ever since the top court in the first week of September had barred banks from declaring loans as NPAs, something which has been opposed by the RBI. RBI has submitted before the top court that its regulatory mandate cannot be undermined and has urged the court to lift the stay on classification of NPAs. RBI has also stated that they have largely accepted and notified the Kamath Committee recommendations over loan restructuring for big borrowers. Also, RBI has submitted that loan moratorium and deferment is at the discretion of banks as per their approved policy, and a one-size-fits-all approach cannot be adopted.
Thanks, Abhimanyu, for that. Let's keep it with more policy-related developments and updates. GST, to be precise. The GST compensation saga doesn't seem to be over just yet. After an inconclusive meeting, the centre said that it will proceed with borrowing for states that opted for option 1. Ruchi joins us with more details. Ruchi, what will the dissenting states now look to do?
The GST compensation saga is far from over. There is a wide possibility that the dissenting states may knock the doors off the apex court. This even as the 5-hour-long GST Council meeting failed to resolve the impasse over the issue of what needs to be done to make good the GST compensation shortfall. In fact, one of the questions that were raised in the meeting was whether the GST Council can stop any of the members to exercise their right and any of the members to borrow funds from the market if they wish to do so. Having said that, the centre kept giving clarifications and assurances that the interest as well as principal will be paid from the cess that will be collected. However, the dissenting states put their foot down. The GST meeting failed to come to any kind of a conclusion, and which is why we're given to understand that the centre has now decided that they will proceed with borrowing for states under the special RBI window for states that have already opted for option 1, under which 1.1 lakh crore rupees will be allowed in terms of borrowing under the special window that has been made available at attractive rates. In fact, the Economic Affairs Department will already start working with the RBI on the same. However, the centre has kept the door open for the dissenting states in case they wish to undertake the borrowing route. Having said that, needs to be seen what will be the way forward, given the fact that the dissenting states had already pushed and talked about a legal recourse earlier as well.
Okay, well, it's 11:45 and that means it's time to address the BNSN question and read out today's winners. So once again, which of the following IPOs had the highest listing gain? Was it Route Mobile? Was it Happiest Minds? Was it Chemcon? Or was it Mazgon Dock Shipbuilders? Well, the correct answer should be on your screens. It is Chemcon Specialty Chem with a 115% listing gain. While it did retrace later on in the day, at listing it was the highest, even higher than Happiest Minds and even higher than a Route Mobile. So we've had a couple people who've got it correct today, 3 if I might say that. We have Rohan Sarda, Yogisha K and Mukesh Kumar Agarwal, who have all guessed the answer correctly. So you've been featured on your screens. Congratulations. Keep tweeting to us and please keep participating in the BNSN Quiz Connect Challenge.
Welcome back. You're still watching Buy Now, Sell Now. Let's turn to Times Network's special investor education series, that's Nivesh Ke Fande, where we share important tips on how to better manage your financial portfolio and shed light on important aspects of financial planning. Here's what we have for you today. Take a look.
Nivesh Ke Fande, I want to talk to you about debt mutual funds.
Yes, Mubina, most people do incorrectly believe that mutual funds invest only in equity markets or shares, as they are popularly called. But that's not true.
You're right. Debt mutual funds invest in government bonds as well as other debt securities.
And while equity mutual funds are considered to be a risky investment, some people also consider debt funds to be risky as well.
Well, actually, nothing in life is without a little risk, right? I mean, not investing your money at all is also a risk, as then your money does not grow at all.
So true. Debt funds do carry some amount of risk, but not all funds carry the same level of risk. All debt funds do carry lesser risk than equity mutual funds, but it all depends on what the debt fund that you pick is investing in.
Well, as they say, risk and return are directly correlated. So it's important to assess your risk appetite when choosing a mutual fund that suits you best.
That's all on this edition of Nivesh Ke Fande. Stay tuned for more insights on investing on the Times Network.